estate jam session. Today we're going to do an episode on crowdfunding real estate. And I've got a great guest that does this often. And so I've got Chris Rising. Chris and I met up at the Commercial Real Estate Influencer Summit, just in passing, I guess, but he gave a great speech up there. So I took the opportunity to invite him in today because he's doing this right now and it's been working very well. So Chris, thank you for coming in today.
Well, thank you very much. It was a great conference, and what I really enjoyed about it was I've spent so much of my life in institutional real estate at big firms. And what you saw firsthand is how the world's changing and how much influence smaller firms can have in the world today. And that was pretty eye-opening to me.
Yeah,
so I really enjoyed it.
I really got excited about commercial real estate from that conference because I walked in and, you know, I guess commercial real estate's always been the, white guy, 48 years old is the average, right?
Yeah.
What I saw there, it was diversity. You saw more women getting interested in it, younger generations. It was great to see. And I just think that, there's going to be a lot of opportunities created by this now going forward.
I think it's the first time I've fundamentally seen that real estate was acting more like tech.
Yeah.
I mean, any company that's successful today really is a tech company in its base because of the way they're using their software and all that. That was the first conference, and I do a lot of ULI, I do a lot of PRIA, which is pension fund stuff. You close your eyes when you go to some of these meetings and it's 20 years ago. When I was at that meeting, it's like, these are people making things happen.
Yeah.
Less people on a team, using technology more efficiently. Mm-hmm. But the other thing that jumped out to me is how much their clients are demanding it.
Yeah, exactly.
And so I'm sure the bigger companies are all coming up with ways to try to be more competitive.
Sure.
But one way is to have two guys like us have 15 people that look like us trying to think we can do things today.
Yeah, I think that's done now. Thank God, right?
Yeah.
And so I think there's a lot of opportunity. I do think crowdfunding is something that I think will create a lot of opportunity for people.
Yep.
And you're doing that, right?
We are doing it. We just finished our third deal. We bought an industrial deal in Houston. It was multi-tenant light industrial, a product type that we really like. We like that it throws off a very strong cash flow, but still has some value add opportunity. And we just decided that, we're still at the phase of all this where we always want to have our backup plan. Do we have our investor out there? But in 2021, we've done it 3 times. We've had 3 absolute successes. Our average check size is somewhere around $65,000. We're getting some 250s, some 300s. We've got 100 plus investors, so it's a lot of K1s. Mm-hmm. Because we are doing it for the benefit of the tax benefits for depreciation and such. Some of the crowdfunders have moved more to creating these REITs that do distributions, but then as the investor, you don't get the depreciation benefit. Right. They're not TICs, so it's a pure LP position. We did this one on Realty Mogul.
Okay.
So we've had incredible success with Realty Mogul. We think they're an excellent team. We've also done deals with CrowdStreet, really like CrowdStreet. I was fortunate because I happen to know Ben Miller and have a lot of respect for him to be an early investor on the corporate side of Fundrise.
Okay.
And so Ben and I have caught up recently. If you want to look at where crowdfunding's going, Fundrise has put out in the last 12 months more money than CIM, one of the largest. Yes, $1 billion.
I had no idea.
$1 billion they have put out between their Reg A and Reg D funds.
Okay.
I'll be honest that as a person who grew up in real estate, Reg A scares me a little. So Reg A is the unaccredited investor, the non-accredited investor. It scares me because I don't know if I want the responsibility of someone who makes $30,000 a year giving me $1,000 and say, because things go wrong in real estate.
And if they don't understand, their first reaction is get an attorney.
Yeah, exactly. So we've stayed within the Reg D world, but I can see us eventually moving over. We created our own investor platform to complement doing Realty Mogul. So we've been out there. Basically, what I like to say is, I spent a lot of my time over the last 10 years building our company by going to someone I met who I knew had been successful and saying, hey, would you want to invest in real estate?
Right.
Now we're digitizing that process. So it's kind of taking, I'm not at a golf club, but it's kind of like taking the golf club people who would all pitch in the hat and say, how do we digitize it? And I will say that the responsibilities we feel are huge, and we always do. I mean, we have we have investors from pension funds and all that, and we always personalize it within our team. But now it becomes even more real when you see someone sending a $35,000 check
Right.
when you're raising $14 million. You
Yeah.
know, that's real money to that person.
Sure
We have to
is.
be very careful with it. But I think what's driving this is, look at Robinhood.
Yeah.
If you look, there was an article in the Wall Street Journal last week that younger, wealthier people don't want the intermediaries. They don't want to go to a registered
Yeah, they wanna go
investment advisor.
direct.
They want to go direct. And so we've invested significantly in the digitization of all this so that someone can come to our site, know that it's safe, that we aren't going to get hacked or anything like that, that they can get all the information they need, that they can have a lot of interactive action with our team. You know, it's not just me, it's not just my partner Scott McMullen, there's about 10 people on our team.
You have a
who
good
are-
sized team.
Yeah, we're about, I probably should tell you a little bit about our company and put it in context. We are the second largest landlord in downtown LA behind Brookfield. We built it from buying one building. My father, after he had sold a public company, he and I formed this, so it's not like a 3-generation family business. And we went from one building in downtown LA. We now have about a little bit over 5 million square feet, about 1 point.
Office?
Office and industrial.
Okay.
We're trying hard in multifamily. We've not had
So
the
hard.
success in buying it. But we did this all with what I would call private equity real estate money, you know,
Right.
the Goldman Sachs of the world.
Right.
As we have evolved, we're starting to see that it's tougher and tougher to do deals with those groups because they're getting pressure from their investors about the double fees and all of that.
Yeah.
So we think crowdfunding democratizes a lot here, allows people who otherwise can't get into a deal, and really their only option is to go to their broker if they have a registered investment advisor and say, hey, can I be in a non-traded REIT,
Yep.
non-traded private REIT, which then is a distribution, not a direct investment as an LP. So we think there's a big market there, and there'll be, right now it's just kind of the tech names you hear, Realty Mogul
All the
and
big
CrowdStreet
names,
and Fundrise. We want to be the first with a real estate background. I mean, you know, I'm fortunate, my father's kind of retiring from the business, but I can point you to US Bank Tower in downtown LA, he built that with his partners. I can point you to San Francisco and Mission Bay, and there's a whole lot of big deals. These are real estate people who understand real estate,
Yep.
our team is, and we're bringing in the digital and the technological component. So I really do believe that we're going to hit a point over the next few years where someone's going to get their bonus and say, I want to take half of that and put it into something that gets me a 6% current return, the ability to double my money in it,
Yeah.
and I'm going to make the decision, and I'm not going to pay anybody else a fee.
Yeah. Well, you're taking it off of Wall Street and put it out into the public,
Yeah.
and it can help create a lot of wealth.
I think it does, and as I said, I like this idea of democratization because you know what, the market's going to speak.
Oh,
If it's a good deal, it's going to have a lot of demand. If it's not a good deal, it won't. And our track record's going to have a lot.
Yeah.
You
that's-
fail once, the whole world's going to know.
Yeah.
And there's not, I mean, the irony is within the pension fund world, they all know too.
Sure.
But now it's a very public process. So we have to be extraordinarily disciplined. We try to make sure, and I say this on every webinar I do, there are just a lot of things we can't control as real estate operators. I can't control another pandemic. I can't control if there was some terrorist attack that blows up the
Yeah.
supply chain. So those are risks that are real. But what I can control is we operate the property with the utmost integrity. Our accounting is all appropriate. I can control all those things, and we'll get a seal of approval for that. But if we have a bad deal where somebody in my team did something we're supposed to do, the whole world's going to know about it.
Yeah.
So it's a lot of pressure.
Yeah, I mean, you don't need to go out there. I mean, you guys have done it enough. You know
Yeah.
exactly where the assets, this is how it's going to work.
Yeah.
You've got the experience. So you think down the road, are there going to be a lot more crowdfunding companies popping up, do you think? Or do you think everybody that's in there now will just continue to take over the market?
Well, I've been in the business.
It'll be the Black Rocks and
I've been in the business long enough to remember, and I know you do too, when ticks were like the rage.
Yeah.
And then so everyone would get their own interest in it,
Yeah.
and then something would go wrong. They do a capital call, and nobody would fund the capital call,
Right.
and these things would implode. So then ticks moved to these non-traded private REITs, and there were
Right.
some unsavory characters in there.
You bet.
One of which I remember when I was at McGuire Properties, we owned a building where I'm not going to say the name, but the group was a tenant, and they didn't pay their rent, so I went in to go see the CEO, and they had moved out. And so I pulled out some drawers and I saw a sheet that had the fee load.
Oh.
And this group was taking 24%. So you give them $1, they were charging 24 cents in fees. So everybody was like, oh, that's a terrible business to be in. And then Blackstone and KBS and some of these really good name people, Hines, said, you know what, we're going to clean this business up. And now they're the biggest. So I would have to imagine that along the line here, you're going to see Blackstone, you're going to see Goldman Sachs come into the crowdfunding world. We'd like to be ahead of them and with an established name. But the responsibilities are really big, and I think the risks are also big, because we just closed this deal, and we had some of our longtime investors who loved it, and we said, we'll carve off a little for crowdfunding, make sure we could do it. You just don't know. There's no guarantee you're going to raise that money.
You're not sure.
So, we're grateful that in 2021 we've had no misses. People have liked the deals. One of ours in Las Vegas, and we're starting to learn the difference of what really gets someone excited. It's market, it's cash on cash return.
Right.
It's a lot less about the 2x or the IRR.
And you're focused on industrial there?
Industrial, but we're looking, I tell my team
how
all the
are you
time.
guys finding industrial? So jealous.
Well, because what we're finding is this piece of industrial, this part of the market that I call multi-tenant flex industrial. And so what that is a project that was probably built 20 years ago, maybe older, that at that time was on the outskirts of an urban area. Over the last 20 years, population growth has moved into it. And so what are happening in these projects are businesses that need under 30%, probably about 15% of the space to be an office with a conference room, a little kitchenette area, a couple offices, and then warehouse space.
Okay.
And that's what we're finding. And the reason we're finding the opportunity is if you're a big pension fund, too management intensive for industrial, too hard to create value. Where the industrial market is on fire are these big distribution centers, the Amazon warehouses and all of that. Not that it's not on fire in this particular sector that I'm talking about, but usually you can find a family that's owned it for 20 years and they've depreciated it down. You can find reasons why people would sell that are different than trying to compete with Prologis or any of those big groups. I don't know how long the opportunities will last. One thing that we have seen is markets that 10 years ago you and I would say, oh, that's a tertiary market. Not the case anymore. Las Vegas is not a tertiary market. Phoenix is not a tertiary market. The Phoenix market, to me, is one of the more amazing markets out there. I have to put Texas in its own category, but outside of Texas, and how fast it's growing, and how industrial in Phoenix. If you would have talked about industrial in Phoenix in 2005, people were like, "Oh no, wouldn't do it," because you can buy it anywhere, and there's no supply constraint on it. There's more supply constraint. It's now a distribution center that if you can get things to Phoenix, you can get them north, and you can get them south, and get them east in a way that you couldn't before. So, I think my point was there are more markets that are considered Class A, non-tertiary markets today than there were 10 years ago.
Oh, yeah.
And so that's what we're trying to go
ago.
to. Yeah, that's what we're trying to get to.
Because I think the pandemic pushed a lot of people out, and now they're in these other outlying cities that are.
Yep.
Yeah, I think you're right on. The crowdfunding is a great way to get started. Now, what was your vision? Why? Oh, crowdfunding is this something you want to try?
My vision is, well, number one, I have a great partner. My father is kind of retiring from my partner Scott and I. We talk at least once a week about what's the next big idea. What can we do that differentiates ourselves? So what we started looking at was how competitive the private equity real estate market had become, where we would go to people and say, this is a good deal. You really got to look at it. And they've paid a bunch of people to tell us that we're not that smart and hammered all that.
That always hurts, doesn't it? You pay them and then they tell you you're not smart.
Then they,
it's like having family.
And then they would go through and they'd say, well, you really don't get this fee or this fee. And we try to explain, these are not fees that are going in my pocket. This is covering the person who makes sure that all the checks that come in actually get digitized and put in, blah, blah, blah. All these legitimate fees, but they would take them away. And we just said, we got to come up with another way to do these deals so that we can pay our team the appropriate salary and we can make the real money for our investors. And we started watching what was happening in crowdfunding, And it's so parallel to what we see happening with the tech world and Angels List and Kickstarter and all these things that have cropped up to allow a really smart inventor to come up with something to get funding. Well, then real estate's next. And I think the other thing is people. I go back to this democratization of it. I think people are just really tired of saying I have to be a billionaire or a multimillionaire to get access to deals and alternatives. And I think there's a lot of reasons why we have these rules about an accredited investor and non-accredited investor. Very paternalistic. I mean, you're going to tell me that a teacher who makes $100,000 a year isn't sophisticated enough to make a decision about a real estate investment? Yeah. That's wrong.
Yeah.
I know we want to protect people, but that's wrong. So the Jobs Act of 2012, it's amazing. It's going to take 10 years. I think we'll have proven to be one of the more important pieces of legislation as it comes to funding deals, because it brought it out of this paternalistic mindset. I think we still have a few more cycles to go through to get it ironed out, but that's why we just think it's a new frontier, not the new frontier, a new frontier of which it hasn't had established real estate professionals in it. It has tech people in it. Yeah. So at some point, the platform is going to be, well, right now it's, hey, we're just, RRP, Rising Realty Partners, you bring us a deal, we'll put it on our platform, we'll expose it to the market. We'll hire a few real estate experts to make sure the deal's a good deal, but hey, we're just a marketing firm. And at some point that's going to switch. And I think the people who are most positioned are the realty moguls and the Fundrises and they're the most positioned to bring in real estate talent. They haven't wanted to go there yet. So and at this point I want to make something clear. They're our partner. They're not our enemy. I'm not trying to we're not trying to X them out. What we're trying to do is work with them and try to get more product on their sites so that people are exposed to more than just the apartment deal that's throwing off a 3% return.
Yeah, or the local retail that needs help. That's how it really started, I believe, and now it's really going on to the. What's your average deal size?
Well, we're unique. We're on the bigger size, so we're doing deals somewhere between I would say about $20 million. So if you just say 65%, we're talking about $8 to $10 million in equity that we need to raise. And then what we have been doing, one deal in Vegas, we did all LP from the crowdfunding, but what we tend to do is we want to have some of our established investors who are sophisticated go alongside. We think when I do a webinar, I can say to someone who's going to put $100,000 of money that they've worked very hard for to say, look, I have this family who's invested with us and they're putting $1 million in. Right. It just should make you feel more comfortable.
Yes, exactly. It does when they've got that much more to lose. Yeah. So is it, tracking all that, if somebody invests, $35,000, $50,000 with you, Fundrise or any of those platforms takes care of that, right? Yeah. You don't have to deal with any of the...
Yeah, well, because we want to be prudent and we have fiduciaries, we do go out of our way to make sure, but the verification falls on the realty mogul or the CrowdStreet. Okay. And we also use a system internally. It's a group called IMS that also does the verification of the accredited investor. We have not done any non-accredited investing at this point, so that Reg A. When you go to Fundrise, you can immediately put $100 to work if you want to. Right. Without having to say, I've got a net worth of this and all that. We haven't gone there yet, but I think it's just a matter of time.
All right, so those are some big deals you guys are working on. If I'm a smaller investor, is it hard to get started with something like this?
I think the fear factor is pretty big if you're the investor. I think from our side, there's a responsibility to provide all the same information that we would give Goldman Sachs. Right. That's a lot of information, and it's hard to digest. So we are really focused on doing what we would call webinars, which is just like an interview I would get from a Goldman Sachs so that everybody can see it. But that takes time. And so for a smaller investor, that may, an ETF, not doing real estate may make a lot of sense. If it's a smaller investor who wants to grow in real estate, I think crowdfunding is a great way to do it. I think it's hard for people to appreciate all the risk though that's involved, and so you got to study. You got to know who you're investing with. And I think it all sounds great to say we're going to 2x your investment in 3 years. That's what our pro forma says. Yeah, that doesn't always happen, you know. And I haven't lost a lot of money in my career, but I have had deals that didn't go the way we wanted. But I'm doing a bunch of deals so it can offset a little bit.
Yeah.
If this is your one deal to put 30 grand in, I would go with the more someone who's got a great track record, who's talking about giving you a core-ish return, a core plus, and not go for the 2x or something like that, because they're few and far between, and they are the higher return they say they're going to give you, the more risk there is. And I think people forget that.
Yeah.
You know,
Absolutely.
It's not, you don't want to bet on black. You know,
That's for damn sure.
Yeah.
I've got a couple more questions. I know that we're running short on time because I want to talk about your podcast as well. But if I'm a new, I tied up this property. I want to go out and raise money through a crowdfunding, but I have really no experience. What are my chances of actually getting a deal done? Pretty hard.
Yeah, I would say it's
So how do I prove that I know what I'm doing?
Yeah, I mean, I'm fortunate. I have a father who had a lot of success and is a great guy, so we have that track record. I've been in this business for 30 years. I used to be an attorney. I used to be a broker. I've been actively investing as a principal since 2003, and I'll tell you, it's hard for me to do it. So if you're a principal wanting to do this, I think that's where the crowdfunding sites can really help you, but they also will likely come back and say, look, it's hard for us to sell you if this is your first deal. So that's where the friends and family, and I use that loosely because everybody thinks when I say friends and family, that means like someone you've known all your life.
Right.
It's someone you've befriended who you know who could be an investor. That's where the smaller person really needs.
Right.
The more inexperienced person needs to start.
Yeah, go for a smaller property, let them invest a couple thousand.
Build a track record.
Right.
Track
record. That's the key.
Yeah.
Because you got to build that trust.
Yeah.
You know, it's tough to build. But
And just like you've been in the business like I have, I see things in a nanosecond today that 20 years ago I didn't see. I had to learn it and make mistakes, and
we've all paid those prices.
Yeah.
Now you look back and go, what a jackass I was.
I agree.
Thick head, you know. But all right, tell us about the real market, your podcast. Let's touch on that.
Well, it's interesting because the real market came out of the fact that about 5 years ago I was getting frustrated that I had this great experience growing up in the business because I worked for John Cushman and I worked for where I would see these legendary people up close.
What an experience.
It was very lucky, and I wanted my team to have that kind of experience, but these conferences get so expensive. And so I started thinking, what can I do? And so I really started as, can I get the John Cushmans of the world on the podcast? And I quickly found out, though, that what people really liked was not so much the legendary person. They liked the person who would be very, very honest about their life experience.
Oh, yeah.
So what I say now is mine has become a prop tech, real estate related, with people who are really honest about the failures they've had. I had Sonny Kelsey from, which is now Bentel Green Oak, but he founded Green Oak. Probably one of my better podcasts, and Sonny went into great detail about what it was like to get fired by Morgan Stanley.
Chris, thank you for coming in today. It's The Real Market. I'm going to put Chris's contact information down below. And so if you want to reach out and see his podcast, go direct. I'm going to put Chris's contact information down there as well. And Chris, thank you for coming in.
Thank you. Enjoyed it.
Appreciate it. A lot to learn. And if you haven't done so, make sure you subscribe and make sure you like.